Good evening, guys. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. Today, 4th September 2020, I am going to be talking about a very important topic, which is nothing but the combination of three things, which is A, B, and C. But before explaining what is A, B, and C, I would like to congratulate Indian media. The way Indian media explaining things, I sometimes doubt about whether Bloomberg as well as Reuters both should be closed because Hindi media is having better knowledge than Bloomberg and Reuters. Indian media is an expert as far as the reduction in gravity or increase in gravity is concerned. So by reduction in gravity, I mean that if there is a very serious thing, then they present in such a way that apparently it look like very easy thing. Okay, no problem. And increase in gravity means sometimes they present a very simple thing in such a way that it creates panic in retail investors and rest because Hindi media itself understand that the knowledge level of retail investor is extremely poor. I know many C category people will feel offended from this word, but let it be. The hard reality in India is that thousands and millions of people wanted to enter into the financial markets without understanding anything or with zero knowledge. And this is being misused by Hindi media almost on daily basis. And today I will give you one more evidence. So in this video, I have three parties, party A, party B, and party C, and fourth, which is D, is the conclusion. So A plus B plus C equal to D. D is the conclusion. Let's start with party A. We should be thank you to Supreme Court that Supreme Court is very serious about the interest of corporates and non-corporates as far as the moratorium is concerned. I heartily thank you, Supreme Court, because I'm very much appreciating that Honorable Court is taking this matter in a very, very serious note and evaluating each angle in a relevant way. I'm very much satisfied from Supreme Court. But few days ago, in fact, couple of days ago, Supreme Court gave a statement that do not tag defaults as NPA for now. So basically, Supreme Court said that you are not supposed to tag anything as NPA as yet until the final orders came. Okay, I agree with that as well, no problem. But I got some data, and that data is that gross non-performing asset in December 2019, the total is approximately 8 trillion Indian rupee. 8 trillion, which is 8 lakh crores. In March 2020, which is precisely 3 months from that period, it's turned out to be approximately same 8 trillion. In June 2020, which is 3 months from March, or precisely 6 months from December, the figure is little bit over around 8.4 trillion. This data is published as in newspaper as at 4th September 2020. Now, first of all, I always raised my voice that the data pertaining to non-performing asset by banks is always underrated. Because the right valuation strategy, which is ECL, expected credit losses, is not yet applied in any banks of India. be it private sector bank or be it public sector bank. Majority of the big fours, so-called big fours, they not shared their opinion about ECL in the public domain. The current auditing standards do not include ECL. So computation of around 8.42 trillion, which is 8,42,000 crores of gross non-performing assets, which includes private plus public sector banks, as of June 2020, I always doubt. Maybe our beloved media will agree on this number, but I never agree on this number. So Supreme Court said a couple of days that do not tag anything as NPA for now and wait for the final order. Okay. I'm in sync because I trust Supreme Court and I'm sure that sooner or later Supreme Court will definitely come up with a right conclusion like the way they did in the case of the Vodafone. This is part A. Of course, there are multiple angles we can predict or we can conclude how Supreme Court will go. Scenario 1, scenario 2, scenario 3, scenario 4, and each scenario would have a different outcome. And we need to hedge these outcome as far as the Bank Nifty index is concerned, and probably Nifty is also concerned. And Treasury Consulting Hedge Fund Desk is anyways working in that direction. This is Party A. Party B, rating agencies. Multiple rating agencies, including CRISIL, came up in public domain that if the moratorium is not being extended, then this much level of or this much percentage of the borrowers not being able to repay, or there would be severe downgrades and so on and so forth. I'm not going into these numbers because I really have no trust on any rating agency. Effective 2008, rating agencies lost their trust. In fact, very recently, in case of Yes Bank, none of the rating agencies warned the investors that this is going to get happen. So I really doubt as far as the rating agencies reports are concerned. But yes, whatever CRISIL said, it is in the right direction. I really wish to read the foreign brokerage reports like Nomura and all, because they do not have any implicit interest in presenting the reports. I don't know whether you understand or not, but in research there is a concept called home bias, which means that always read the research of that entity who do not have any implicit interest in that regards. That's very important. And guys, did you read the BNP Paribas report? Lovely. We're definitely going to have a very detailed video in that regards. BNP Paribas came up with a very beautiful report on Indian stock indices, something which I'm saying from long time, and BNP Paribas came up as a report. But I know that C category people will never understand that. Well, this is Party B. The Party A is the Honorable Court, Party B is the rating agencies. Party C is divided into two parts. SEBI oblique RBI, which is C1. C2, mutual funds. You must be thinking, how come the mutual fund came into the picture? Or what did happen? I need to consider C into two parts, C1 as well as C2, and keep C2 as mutual funds. Even when the COVID-19 was not there in the dreams of anyone in the globe, one of the biggest issues Indian mutual funds were facing is the default risk. And you can open Google and see that there are many companies, even before COVID, they defaulted and heavily defaulted. This led to either downgrade of various schemes by that mutual funds and shut it down. Franklin Templeton is a leading example. But once again, the credit has to go to our mainstream media that after Franklin Templeton case, nothing came in the public domain. It looked like everything settled, but nothing is settled. Even today, I always consider that the default risk, oblique credit risk, is the biggest risk the mutual funds are facing, at least in India. Because at any given period of time, any big corporate can default. We also understand that there are a lot of concerns being raised in the public domain by the various vendors of Future Group, even till now, that they not yet received their compensation or their outstanding payment, even after getting lot of assurances from Mr. Biani. And Future Group is not an exception. There are so many corporates that being winded up, thousands of startups winded up, thousands of small scale MSME winded it up. But unfortunately, even after 6 months, or precisely speaking 8 months of COVID, we do not have any scalable data that can confirm this, that can confirm that evidence, or that can act as an evidence. Data is definitely always a big scarcity in the developing nations, even sometimes in the developed nations also. So on 2nd September 2020, SEBI came up with a notification to the AMCs. AMC stand for Asset Management Companies. In layman, it is their mutual funds. Fearing a rush of redemption requests from investors in debt mutual fund as the companies default on repayment, the market regulator has allowed asset managers to side pocket their exposure to entities that have approached them to restructure their debt. So let me explain this in a very layman example, very layman example, then we conclude this. There is a company called Ramlal and Company. But before giving an example, we would like to take an indemnification. If this example turn out to be a true example, then this is only a coincidence. There is a company called Ramlal and Company, and they are into business of computers. Ramlal and Company borrowed 5,000 crores from State Bank of India. But somehow, this company is facing a lot of financial stress. And they credited the whole financial stress to COVID. Because our people do not have the knowledge, neither they knew that even before COVID, India was facing a deep mess as far as the credit defaults are concerned. In fact, majority of the big credit default happened before COVID. After COVID, they not happened. So it's a trouble account for SBI. SBI contacted them several times, but they're not getting their money back. For a minute, I assume Ramlal and Company is a listed company and they are very close to operators. In the last 1 week, several such stocks rise by 20% or more without having a single rupee of business. I hope you're getting my point. Without having a single rupee of business, only on the word called hope, the share pricing are rising. And I'm sure that many retail as well as the young guns are buying these shares on an expectation that they will come or they will continue to rise. But soon they will get the reality. So Ramlal and Company is into the business of computers. They borrowed 5,000 crores from SBI. Ramlal and Company is a listed company. So there is a mutual fund called X Mutual Fund. There are two mutual funds, Mutual Fund 1 and Mutual Fund 2. Mutual Fund 1, who runs equity schemes, they invested in Ramlal and Company shares on a hope that Ramlal and Company will go shoo like this. While Mutual Fund 2, who also hold equity scheme, but they bought the debt, which is non-convertible debentures invested in non-convertible debentures raised by Ramlal and Company. All of a sudden COVID happened. RBI came, they issued the moratorium period, and standing today, it is 31st August 2020. Even today, Ramlal and company is not in a situation to even think of repaying the interest forget principle. And Ramlal and company is consistently watching or evaluating everything, in which direction Supreme Court judgment will came, which direction RBI will came, which direction banks will came. Okay. So in short, Ramlal and company is a stressed account. Now there are two options. Option one, that KV Kamath committee needs to submit the report, I think on 6th September, something like that, about their overview about the moratorium. I don't know how this committee will shape up, but I'm surely know that this committee will definitely ask for the increase or extension, because they understand if the moratorium period go, then it's a big mess. This is option one, moratorium period extended. Ramlal and company got a call from SBI that you need to pay. Basically, we are extending you. Currently, we are not earmarking your account as NPA as far as the orders of Honorable Court is concerned. Okay. Option two, moratorium extended only by 2 months. At the end of the October, banks going to Ramlal and company and asking where is 5,000 crores plus principal. And Ramlal and company is like Vijay Mallya second. Check in my pockets. Here is 5,000 crores. But mutual funds invested in Ramlal and company equities and debt, and investors invested in that mutual fund. 99% of the retail investor even not reading one business newspaper in a day, and they do not have ability to interlink these things. Now what happened? All of a sudden, Ramlal and company defaulted. What mutual fund do? Mutual fund will segregate the scheme and charge the entire 5,000 crores from the investors. What max happened? They will put Ramlal and company to NCLT, and we all knew that how good and fast tracked is insolvency and bankruptcy code. Insolvency and bankruptcy code is one of the finest achievement by Insolvency and Bankruptcy Board of India, with so many flaws. In fact, I still remember 2 years ago when I spoke on behalf of Institute of Company Secretary of India for IBC, I raised many points and most of them turned true now. But we know how democracy works. Now, Ramlal and company account is defaulted. Investors who invested in mutual fund M1 or M2, they are on the road, or they are watching the TV when the resolution will come, just like Franklin Templeton. Even today, the credit risk fund investors do not know where are they. Are they going to get something, or they are not going to get something? That's more important. But the priority was to put 20% margin on retail investor, not resolving the Franklin case. That was the priority. SEBI asked AMCs to earmark the schemes. And what is that, guys? I'm just reading for you, though I know what earmark is. To side pocket the scheme. Side pocketing allows investors to recover investment in illiquid part of their mutual fund portfolio without having to resort to distress sale to underlying asset. Come on, guys. If you do not have the knowledge, then Treasury Consulting will give you knowledge. In just 5 lines, you explain side pocketing in such a way that it looks like very easy. Had it been, then why the Franklin Templeton and many mutual fund cases, they not yet resolved even after several months? And the next paragraph, which I'm going to be reading, guys, you feel like side pocketing is like the most simplest thing. Side pocketing allows investor to recover investments in illiquid parts of their mutual fund portfolio without having to resort to distressed sale of underlying assets. Since redemption are not permitted from side pocketed units, funds pay investors when borrower make repayment on the stressed debt. How simply media explain? Funds pay investors when borrowers make repay on the stressed debt. How simply? But practically, this is an event of credit default, and history is witness that no country of the globe can resolve credit default easily. No country of the globe. Now I would like to summarize three things. A. Supreme Court is not yet decided on the judgment. As and when the judgment will come, everyone will get to know. We can only assume the various scenarios. Scenario 1, Scenario 2, Scenario 3 and multiple. Just like in case of Vodafone, everyone assumed different scenario and Honorable Court came up that, okay, fine, we give telcos 10 years. You pay in 10 years. Which is definitely a good judgment. Party B, and you know how fairly the Party B works. Party C, who is mutual funds and investors, they really do not know where they are heading. And this raises three questions to me. Number one, there are many mutual funds we have in India, and almost all mutual funds have multiple categories of debt funds. Liquid plus, short-term debt fund, floating rate fund, money market fund. There is almost all are fancy words. More or less portfolio is 10-15% here there. After reading this article and allowing AMCs to side pocket that exposure, is it mandatory for or is it advisable to retail investor to look at the portfolio of these schemes in which he invested? But guys, 99% of the retail investors even do not know how to see the portfolio. That is another problem. And AMCs will not tell you about that. That is the biggest problem. Secondly, even if 1% of the investors, those who know how to read portfolio like me, if they put any questions to mutual fund, would mutual fund even bother to reply that? No. Question number 3. Even after knowing all this, because currently we do not know how much amount of side pocketing will happen, and I'm sure that amount of side pocketing will never come in the media. Do we have any forum, any platform, anything, any site wherein I can go and on a consistent basis I get to know this much amount of side pocketing is done as yet? This mutual fund, this scheme, this is side pocketing amount. This whole issue, which is explained by our beloved media in 2 paragraphs, is actually an issue of probable credit default. And one thing I'm sure that even if the moratorium period is extended by another 6 months or maybe by another 2 years for a while, we are at 2020, even if moratorium period extended to 2022, an intelligent and a person having IQ greater than 8 agree that Indian economy was facing the issue of credit default even before COVID. So even if moratorium will extend to 2022, expecting these companies get back to the pre-COVID level is a complete optimist assumption. That is. Things are not really easy even for mutual funds, and things are not easy even for moratorium. I think the moratorium case is now getting more messier, and with this circular is in the picture, it is getting more messier. Treasury Consulting invests in top 8 mutual funds of India. We consistently review our portfolio. We regularly check our portfolio, but once again, the complete surety is definitely not there. God knows who will default at what period of time. But once again, allowing side pocketing to mutual fund is definitely not a right decision. I would like to conclude this video linking this with 2008. In 2008, when the most intelligent central banker of the globe, Greenspan, pushed huge amount of quantitative easing into the system, majority of the people appreciated him except me, because I was raising my voice that you are not resolving the problem, you are not fixing the problem, you are only postponing the problem. But we know that people don't understand these things. Today in 2020, the whole globe, even the top economists, are in agreement of this 36-year-old person statement when I give in 2008, when I was around 23 or 24 something, that guys, you are only postponing the problem. You're not resolving and you're not fixing it. Issuing such kind of circular is a similar act. You are not fixing the problem, you are only postponing the problem. Even if moratorium will extend to 2 years, it is not fixed. You only postponed it. But I'm sure by the time retail investors would understand that, it would definitely be too late, because the level of education a retail investor should have is I don't want to say. But one thing I always believe is that the first duty of the regulator is to impart the education in the retail investors, and this applicable to all regulators of the globe, so that the individual investors can take their own call. And I should thank you to Hindi media for explaining this critical situation in such a way that it is just a normal story. And that is the reason I am forced to have one line now, which is, maybe a few years ago, reading business newspaper was all about gaining knowledge, but now business newspaper is all about losing knowledge. And why I read business newspaper, even though we have Bloomberg and Reuters, is I really wanted to see that the level of intelligence of our media. And I always wanted to see that how they spread the news. I hope you understood what I wanted to convey. This side Rahul Magan from Treasury Consulting. You know our WhatsApp 9818485155. Treasury Consulting is consistently evaluating everything as far as the COVID-19 is concerned. We are using Bloomberg and Reuters. We are consistently monitoring the actions of all economies, and especially United States of America, because the elections are just 60 days away. And as elections will come closer in United States of America, the action will get more hotter. And when action will get more hotter, then you know what we're going to get done. But we are consistently keeping an eye as far as all the developments of COVID-19 is concerned, and I consider this as one of the development of the COVID-19. But thank you very much. Have a great time. And in case you have any questions about our paid programs, our Android app, our upcoming Apple app, our hedge fund desk, our free reports which we are doing, you're welcome to contact us. Have a great time, guys. Talk soon.